Good afternoon. My name is Martin Hauptman. I'm an attorney CPA with the firm of Mandelbaum Barrett PC, and I am in the Tax Trust and Estate Department and in the Employment Law Department. And today we're going to continue our July webinars on New Jersey restaurant hospitality and the impact of the One Big Beautiful Bill Act, which was signed by the President on July 4th, 2025. And how it impacts restaurant owners and employees. The One Big Beautiful Bill has a provision providing for no tax on tips. This applies to tip income up to $25,000 and can be deducted from federal taxable income each year. There is also a separate provision on no tax on overtime. This permits a deduction of $12,500 for single taxpayers or $25,000 for married taxpayers in each year. Both provisions are effective for tax years 2025 through calendar year 2028 and have significant compliance implications for employers and employees. The no tax on tips provision is deductible up to $25,000 per year. Eligible employees are customarily and regularly tipped occupations as determined by the Secretary of the Treasury, and a list will be published by October 2nd, 2025. There is a phase out of income deductions. The deduction is reduced by $1 for every $1,000 of modified adjusted gross income above $150,000 for a single filer and $300,000 for joint filers. The types of tips covered include cash tips, credit card tips, and electronic tips. Non-cash tips are excluded. The reporting requirements for the employers that employers must report all qualified wages on Form W-2. A reasonable period may be used for calendar year 2025, with stricter requirements for 2026 going forward. For payroll tax purposes, Social Security and Medicare taxes on tips still apply, only federal income tax is affected. As an example, if Maria, a server, earns $18,000 in tips in 2025 and her modified adjusted gross income is $60,000, Maria can deduct the full $18,000 from her federal taxable income. She still pays payroll tax, Social Security, and Medicare on the full amount of the tips. Her employer must report the $18,000 in tips on her W-2 and ensure proper reporting compliance. The exclusion for federal tax purposes does not apply to state tax purposes. On the area of no tax on overtime, the deduction amount that employees can deduct is up to $12,500 in overtime pay from federal taxable income, $25,000 for joint filers. To be eligible, it applies to qualified overtime compensation as defined by Section 7 of the Fair Labor Standards Act. That is overtime required by federal law, not by state law or collective bargaining agreements. There is a phase out, the same phase out as for tip income. It's $100 for every $1,000 of modified adjusted gross income. Above $150,000, $300,000 for joint filers. The employers must report qualified overtime on Form W-2 or 1099 for non-employees. For payroll tax purposes, Social Security and Medicare taxes still apply to overtime. Only federal income tax is affected. As an example, John, a line cook, earns $10,000 in overtime pay in 2025. His modified adjusted gross income is $80,000. John can deduct the full $10,000 in overtime from his federal taxable income. His employer must report the $10,000 as qualified overtime compensation on his Form W-2. John is still responsible for payroll taxes on the full overtime amount. The employer's responsibility for reporting. The employers are charged with accurately tracking and reporting qualified tips and overtime on Forms W-2 and 1099. For calendar year 2025, a reasonable method for estimating tips is allowed. Stricter reporting will be required in 2026. For tip pooling, only employees in customarily tip roles per Treasury list to be published are eligible for the deduction. Expanding tip pools to ineligible roles may risk compliance violations. The employer is obligated to inform employees about the new deductions and their eligibility. There will be no change to payroll tax withholding. Federal income tax withholding may need to be adjusted as IRS updates forms and guidance. For documentation purposes, employers must maintain detailed records of tips and overtime to support reporting and employee tax filings. The IRS guidelines say that updated as Treasury and IRS regulations, especially regarding the list of eligible occupations and reporting methods, will be issued soon. Keeping in mind that these deductions do not affect state or local income taxes unless states specifically conform to federal law. If you or your business have any questions or need guidance in complying with the One Big Beautiful Bill, do not hesitate to contact the team here at Mandelbaum Barrett. We're happy to assist you with all of your tax and employment issues. Have a great day.